You're listening to the Creative Capital Podcast. You're dying to learn about how you can create wealth through real estate investing? Then you've come to the right place. Join in every week as we go over the ins and outs of real estate investing and learn how you too can become financially free. What's going on, everybody? This is Josh Ferrari, host of the Creative Capital Podcast. I'm so excited for today's guest because he has a very interesting niche inside of real estate. You hear about multifamily syndication or just syndication in general a lot. And so you hear about the side of people just doing the acquisitions, and then you hear about the side of people doing kind of the standard model of finding the deals and raising the money. But then you also hear about the guys that just raise money, that just have an entire business built around raising capital and building. You kind of become the investor relations side of the business. And then that is what you do to other sponsors or other deal finders that are bringing the deal flow to you. And so that's what our guest today does with Asim Capital, Mr. Hunter Thompson. Hunter has been killing it, really crushing it maybe not since he got started, but for the last couple of years, he's been doing phenomenally well. He's got over $100 million in assets at this point. He's raised probably 50, 60, 70 million dollars and just continues to scale. His business continues to move forward. And I'm realizing why, because in this interview really dives deep into the ins and outs of some of these things. Mentions that, you got to attract and then educate, nurture, and then get your investor to actually invest in the deal. You have to become the individual that sets yourself apart than every other Joe Blow that's out there. And he does a great job at explaining, and he actually mentions that is his unique ability that allowed him to be so successful that he is now. He says he's a great communicator, and I think he is. If you guys haven't read his book, Raising Capital for Real Estate, How to Attract Investors, Establish Credibility, and Fund Deals, then you definitely need to go and check that out. It's a phenomenal book. I actually heard about it from a previous guest we had on, from one of our core 4 questions of what your favorite real estate related book is. He mentioned Hunter Thompson's book, and I was like, I gotta go check that out. I haven't heard of this guy. So then I immediately got a copy of the book, read it, and it was great. It was fantastic. It's allowed us to really niche in who our target avatar is, who our target market is for the actual investor that we're looking to do business with. At the end of the day, this isn't like a one-off relationship that you're trying to create with someone. You're trying to create a lifelong relationship with this individual that starts with the one deal and eventually goes to more and more and more deals. And you guys end up growing wealth together. They start with, say, $50,000. You double their money. Maybe they want to give all of that to you on the next one, maybe not. But either way it goes, everyone's wealth continues to grow when you create these long-standing relationships. And the show was just fantastic. I really can't wait for you guys to hear it. And I know I'm going to be listening to it again. So without further ado, we're going to jump right into the show. Hey, what's going on, Hunter? It's so exciting to finally have you out on the show with us.
Thanks again for the opportunity.
Yes, I had actually heard about you from a previous guest that mentioned your book. And I was like, never heard of this guy before. So I got a copy of the book, read it, was like, wow, this is fantastic. Got to get this guy out on the show. And then since then, I've kind of been following you and watching you with what is the name of the program that you run, or the mastermind, the event?
I've done quite a bit, so it's hard to say, but we do have a mastermind called Raise Masters, which is a capital raising mastermind, which is kind of a segue from the book, which is specifically about raising money. So,
yeah, been following you on social media. But for those that don't know who you are and what you do, tell us a little bit about yourself, and then what got you interested in investing in real estate.
I'm managing principal of Asim Capital, which is a private equity company, and we have about $100 million of commercial real estate under management. Raised I think today it's about $42 million of private equity across multiple sectors of real estate and non-real estate deals. And I got into this industry a way that a lot of people have been getting into the industry, over the last 10 years, which is as a passive investor. So I started 10 years ago, prior to the Jobs Act, investing passively, basically by identifying best-in-class institutional quality operators deferring to their expertise so they can focus on the economies of scale that go along with that, institutional quality software, relationships, et cetera, that are specific to their niche. And I, as a passive investor, can defer to their expertise and also be diversified into multiple sectors, multiple risk profiles, multiple geographic locations, et cetera. And so I started investing, started to have success, built up a track record with my own capital, and then started bringing in friends and family. And I was basically felt a bit odd about the fact that I was taking it very seriously, but I saw other passive investors, even if they had the time, they didn't have the knowledge or the economies of scale to make it viable for them to take it as seriously as they should or would want to. So what I mean by that is even if you invested, let's say $250,000, it's very challenging to fly around the country looking at properties, conducting criminal checks, background checks, talking to referrals, not only investor referrals, but in attorney referrals, CPAs, construction companies, management company referrals, just an extensive list of due diligence that I think a prudent investor would complete if they could. But if you're only investing, let's say like, 50, 100, $250,000, it's not economically viable. So I saw an opportunity to create a company that acted as a placement agent of capital, where all we did was bring capital to the table and vet sponsors and pool our investors together. And because we're investing quite significantly, 5, 10, $15 million, we would get favorable economics for our investors or access to great deals. And that was the thesis of why I founded Asim Capital. And like I mentioned, we went from one investor, just me, to 5 to 10 to 100 to hundreds, and have purchased deals in pretty much every major commercial real estate asset class.
So how are you primarily meeting these sponsors that you're vetting? Just people that just natural like growth or organic growth from someone connecting you with another person, or you actually have a team that goes out and searches for these folks? What does that look like?
Yes, that's actually a really common question that we get during these like mastermind calls for people that are interested in our program, which is, are you going to provide us with deal flow? And it's not something that we do from a top-down manner because I'm just very hesitant to do deals. We have not created a scalable way to attract sponsors. We've created a scalable way to attract investors, but our strategic partnerships, that's a very difficult to replicate kind of system, in the sense that I'm sure if someone were to ask me, are you looking for new sponsors? Technically, the answer is yes, but in the same way that I'm looking for a new best friend, right? Like if that happened, that would be great. But the reality is we have a couple of best friends. We've done business with them for 5, 10 years, and it's very difficult to replicate the systems and processes and relationships that had to fall into place at the time to recreate that. So the answer to your question, though, is the way it would typically work. We start hearing great things about a sponsor. It's a very tight-knit circle, people that actually deliver on their promises, conducting extensive due diligence, including on-site visits, and maybe me personally investing with them significantly, and then seeing success. And only at that point, if it's a perfect alignment and we're able to negotiate the appropriate compensation, would we bring in our investor group. So a pretty challenging thing to do. And at the end of the day, I'm happy if we only have 5 or 10 groups that we feel comfortable doing that with. That's no problem with me. That would be a lifetime goal to have 10 sponsors, each of which that have 10% of my portfolio. And it's kind of a goal that we're always going to be working towards.
Yeah, I can see how that would be a struggle to scale because there's 2, 3, 4 years that you're kind of waiting, watching as they manage the asset that you invested in to see if they're actually worthwhile. Well, cool. Yeah. I kind of like the way that you've structured your company. I had heard that initially when I first got into syndication was that there were people that did deals. There were people that like just deals. And then there were people that did deals and raised capital. And then there was people that just raised capital. And I'm like, man, what am I going to do? It's hard to determine what exactly I wanted to do. And I didn't really know exactly how all of that worked until diving deeper into it and realizing that having conversations with people like yourself who are actually in this space, because there's a lot of differences. I mean, just from what you're saying, considering someone that say does deals and raises capital versus someone that just raises capital, you're looking at something completely different because you're having to outsource the deal flow to someone else. So then that level of trust has to be there. I think it's really powerful that you mentioned that. So On that note, I know that we really wanted to talk today about how to attract investors, establish credibility, and fund deals, which is kind of like the subtopic of your book that you just recently wrote. So tell us a little bit about that book that you titled Raising Capital for Real Estate. What kind of inspired you to write that?
Well, the inspiration came from the reality that I had a tremendous amount of benefits that most real estate entrepreneurs don't have. I had the ability to invest personally. I had the foresight to establish a strategic partnership prior to creating an investment thesis. I had extremely favorable market dynamics, being a recent graduate of college right when 2008 happened. So the bottom of the market. And with all those tailwinds, failed miserably on my first real capital raise. My first moment when I really tried to bring in significant capital outside of immediate friends and family, I couldn't have done worse. I mean, I raised $0 in my first capital raise, and it was really, really embarrassing. And it was obviously financially, there were some implications, but far more importantly, at least to me, was the embarrassment of having to tell all these people that I had said, I'm a real estate entrepreneur. I live in California. I'm doing these deals and making moves. And then to say, oh, how'd your most recent and first capital raise go? Oh, it couldn't have gone worse. Like, you can't lose money in a capital raise. So we didn't raise anything. And so basically, I made the mistake of falling for the same myth that so many real estate entrepreneurs fall for, which is if you have a good deal, the money just shows up somehow. And that's something that we've all heard, and it's just not true. Nobody cares how good the deal is. If you're not in front of the right audience, if your people that you're speaking to aren't already interested in these topics, if you're trying to convince someone that a 13% IRR is what they're actually looking for when they actually don't care at all about the return profile, for example, or even know what a passive investment is, you're not going to be able to do it. And here's the tricky part. You may be able to do it once or twice. You may be able to get your mom to invest with you or your uncle. But those relationships are impossible to replicate. It takes years to get the kind of trust to get someone to do that. So what business is about generally, but especially the capital raising business, is expediting the time it takes to get someone to go from a ice cold lead to a repeat investor. And my book is about how we've built a system that has allowed us to raise tens of millions of dollars, usually without requiring a phone call, but never more than a phone call. You know, I actually, just before I got in this interview, I received a commitment to invest $624,000 by a person that did not require a phone call. And it was the second time they've invested $624,000 with us in the last 6 months. And they're not idiots. They're extremely knowledgeable about the particular investment opportunity. They know more about me than some of my best friends. It's just that all of that work that they have done has not required my time on a one-on-one basis. So the book is about how to create that infrastructure to attract tens of thousands, hundreds of thousands of leads, so that by the time you put out a deal, it becomes oversubscribed very, very quickly.
I love that you brought that up. Two major points there. One being that if you have a good deal, the money's going to come. I most definitely think that is a massive, massive myth in real estate. And it's something that I fell prey to because I had never, getting started, you never have done a big capital raise before. So you just think you're going to find this awesome deal and the money's just going to come to you. The money doesn't come to you because no one knows you or trusts you enough to give you $50,000, $100,000, whatever it is, to invest in this asset. Like, hey, have you done it before? Well, no, but I've got partners that have. Well, I don't know your partners and I barely know you and you don't have any experience. So sorry. And then they're not interested. So
that's exactly right.
I think that's huge. And I wanted to go ahead and ask you, transitioning into what you had just mentioned about building basically credibility with these investors without ever having a conversation with them. And that's not to say that you shouldn't ever, or that you should just never be personable with these people that are giving you hundreds of thousands of dollars. But how do you go about structuring that? Give us kind of like the high level view of what you're saying kind of looks like from a passive investor standpoint.
Yeah. So, I mean, basically the whole point is that I'll talk about the passive approach, but from a capital raising standpoint, we view ourselves at the middle of the circle, like everyone does. And we're going to go out and convince this person to invest with us because of our sales skills or our ability to communicate or our knowledge about the deal or how good the deal is or whatever myth you have in your mind. And that you're going to get them to give you their hard-earned 50 grand. And that's kind of like the circle. It's the same way that there was like a myth about the earth being the center of the universe. It's the same kind of thing. What I want to create is a robust inverted triangle that has a bunch of cold leads at the top and repeat investors at the bottom. And how many cold leads I can get the top of the funnel, is what the term typically is, and take them through the attract, educate, nurture, close process, the less and less I care about the ratio of people that do that. And that's what makes this business so scalable. So as an example, I don't ever want to present in a room of, let's say, 30 people ever again. Not even the right 30 people, not if it's not recorded and replicatable and usable over multiple different mediums and all those things, because my time is extremely valuable. So I want to figure out, how can I attract leads? And so that's the first and most important question. If I can get 10,000 people to attract themselves to me, then I don't care if my close ratio is 1% or 0.1% or 0.01%, because my time is not tied to the amount of people that are reviewing content, ebooks, webinars, etc. So let's talk about attract. We'll talk about it in that order: attract, educate, nurture, close. So attract is about identifying who the best investors that you want to work with are, your particular niche, whether that be people that are active military, people that are recent retirees, people that are focused more on cash flow as opposed to appreciation, whatever your niche is. And in listening to what they want, and then creating content that answers and provides them what they need. And then directing them, of course, to go and exchange their email address for that piece of content. And so people talk about ebooks. That's really common, writing 4,000 words that'll clearly explain your investment thesis, add some value, and have an opportunity for them to opt in to either invest in your deal or schedule a call or something like that, or something like a webinar. I'll give you a perfect example of this. So recently, obviously, COVID is playing a huge role in most people's thought process on how they should invest. So when COVID starts happening and the rumblings and our dream investors are talking about, should we be doing deals at all? It doesn't matter what the discount is there any deal that makes sense right now? So as opposed to hide from that and just put out another multifamily deal, we did a webinar that was literally called, should we be doing deals at all? To answer the question that our dream clients are asking. So as opposed to saying like, oh, everything's fine, don't worry, multifamily is great, we're basically saying, this is a question that we should be asking. And here are some elite thought leaders that are asking the question as well, and how they're overcoming that potential challenge. So when we have that webinar, we draw hundreds of people, if not thousands, to our website, exchange their email address for the opt-in of that webinar, and then take them through a lead nurture process, which may be something like, here's the download that you requested. Here is another resource that's talking about a related topic that may actually take more of your time, but now that I've got the credibility from the first resource, I can ask more of your time. Here's a case study of this actually working and how we've done this successfully. Here's some of the benefits of what you're going to get. And then here's an investment opportunity and scarcity associated with how long you have to make that decision. That right there is our whole business plan. And that's outlined in a tremendous amount of detail in my book, which by the way is available at raisingcapitalforrealestate.com.
Wow, that was massive. If everyone could literally just go back and listen to the last 5 minutes, like you said, it's like the Blinkist version of the book. Have you ever heard of that app, Blinkist? It's like 5 to 15 minutes, real quick, high level view of a book. If people could just go back and listen to that, I think that was huge. I mean, that's basically the business model for most syndicators, especially when it comes to raising capital and needing to do exactly what you said. And I just want to dive more into that. I mean, so you mentioned the first thing was attract. You got to attract people. So how do you primarily attract investors to your company? Not maybe necessarily from an educational standpoint, but what's the initial desire for people to want to know more about you and what you do? Like, what makes them interested in investing with you specifically?
So our investor base, I'll put it this way. So a lot of Fortune 500 companies, they go through this strategy of creating their dream client, and it's an avatar. It's not a real person. They may give them a fake name. They may say, oh, George is 29. He makes $100,000 a year. He works in tech and he goes to martial arts for his kids every Wednesday. That stuff gets a little too much for me in terms of being hooty tooty. George doesn't exist. I feel weird about making up this story about this guy. So what I do, and I haven't really heard anyone talk about this, but I think it just drastically changed that exercise for me. I find real individual people that I actually like and would like to work 16 hours a day to serve and just build my business to focus on them because there's more of them around. So what I want to do is identify a couple of people that I just would love to work all day for, just so I can help them get to the next step and just to provide exactly what they want. Now, as far as the niche in which we work and how someone would find out about us and why someone would want to invest with us as opposed to someone else, that's really a science, an art and a science. And so our podcast, for example, which is the source of not only most of our attraction, but also our lead nurture, is that it's not the first podcast people are going to find or listen to. If you're not already an intermediate investor, it's likely not going to be something you're interested in listening to. Now, if you do already have a background in finance or business and you want to be advanced as quickly as possible, if you listen to 10 episodes, you're going to be advanced quickly because we don't talk about what is real estate, why is it beneficial. I have IMF consultants, people from the World Bank. I've got Jim Rogers, Doug Casey, and Grant Cardone, like really high level players that have been participants in a significant manner in the finance sector, or authors or economists or thought leaders, et cetera. And so when I have these people on, I don't want to create marketing. I want to learn. So if I learn something every episode, so are the listeners of the show. Now, that does not attract beginners. It attracts savvy investors that are already well on their way towards this path. So I don't need to convince anybody what a passive investment is, and that's not a Ponzi scheme. Like our tagline, for example, and our name, it implies that people understand this industry. The name of my company is Asim Capital, ASYM Capital. It's short for asymmetric returns. There's so much embedded in just that tagline that someone would be viewing the space through a risk-adjusted basis, that they understand the fact that just because a return is what it is doesn't necessarily paint the whole picture. There's everything in my business is catering towards that advanced passive investor. And so what happens? We get 20,000 downloads a month, but the response is far more pronounced than some of maybe our competitors that maybe have 5 times that. And so, there's some data to back that up, but that's the result. And of course, I would like to be more famous, but the way that I wrote my book as well, right? You've read it. That book is not designed to be a New York Times bestseller. It's designed to really impact a couple people's lives. And it attracts the people that I want to have conversations like this to and about.
I love that. You're focusing and honing in all of your education and time into teaching, basically. In essence, you've become this professional educator that is really great at not only talking to people, but creating relationships. It's like the perfect combination of someone that you might say would be like in investor relations. And so your entire business basically becomes investor relations, and you've built this avatar to focus on, and everything that you do focuses on that avatar. I think that's huge because I've heard so many times people say, you need to create an avatar, you need to do this, you need to do that. And then you look at what they're actually doing and like the stuff that they're posting. If they do so happen to have a podcast, it's not preaching and teaching to that specific person. It's not like far off, but like you said, they're like, what is real estate? Why is real estate good? But they're wanting to go towards what you're saying of the intermediate to the higher level individual. And it's like, it's just it's not lining up. The higher level individual is not going to listen to a show that's saying, why is real estate a good investment?
Yes, exactly. And it can be a little creepy, right? So like we have a coaching program that I mentioned, this mastermind, and we had one individual in mind that I was like, this would be the perfect client for this coaching program. And he is very advanced and he's raised more than $15 million on his own. So I basically was like, that's my dream client. I'm going to create, what would this person be like? I've already got a ton of momentum, but this is a total no-brainer. So I built everything around just this person. I'm not going to say his name because it'd be weird, but I just intentionally did it. And guess what? He was the first person to move forward. And our mastermind is not cheap. And in the modules in the mastermind, I literally do mention his name and say like how this I was like, even as I was recording it, I was like, there's 100% certainty this person's going to move forward, even though we haven't talked about it yet. And here's why. And I went through the list of how we were able to cater the content directly to them and create an offer that this particular person could never refuse. And guess what? There's more people just like him. And so several dozen people move forward with our mastermind, right? So you don't have to make it up and get hooty tooty. Just identify it and give them exactly what they want. One other thing I wanted to say, you're right regarding the investor relations, and a big part of what I do is teach, but I feel like there's such an important conversation that maybe would be for a different interview about our entire due diligence process, right? Because anyone can learn this marketing game and just turn on the faucet, but we've created an incentive structure that does not pay you unless the deals perform. And the point of this interview is to talk about raising money, but I'm telling you, if you Google around and find out a little bit more about me, you'll recognize how seriously I take this business, how much of a responsibility it is to take on investor capital, for example. But in terms of the raising money part, that's a marketing game. And the reason I'm not afraid to mention it like that is because I don't see enough people talking about it like that. They're afraid to recognize the tools that are needed to succeed. And I want people to help their friends and family and others get money out of the stock market. So I'm willing to make that leap.
Yeah, that's so huge. I'm definitely going to be rethinking my strategy now as far as, creating an avatar and doing stuff that caters to them. I think that's a really neat idea that I've never heard before. Cool. Okay. So you mentioned also credibility. First of all, let's say, what is credibility? And then what have you found to be the absolute best strategy to build that?
You have to be yourself, number one. Authenticity is going to help you tremendously, and anything other than that's going to be terrible for you. So I'll tell a quick story. So I'm an early investor in a company called Thrive Market, and it's basically an online version of Whole Foods. It's a subscription model. A friend of mine, Nick Green, started the company, and he and a co-founder who recently left the company, they were kind of two opposites, where one went to kind of a community college. Nick got a perfect score on the SAT, and I believe went to Harvard, if I remember correctly. It's been quite a bit of time. And so they were kind of going into pitch VCs. And the gentleman who is his co-founder, you're pitching these guys who are Wharton Business School guys, Princeton, Harvard Business School guys. And the gentleman that went to community college was just kind of like hiding his educational background. Now, he had started a company and sold it for tens of millions of dollars, but he was still self-conscious. He was still feeling like not good enough to be in those meetings, even though he'd already had tremendous success as an entrepreneur, and kind of hiding his background, which is a really interesting background and one that's far more relatable than getting a perfect score on the SAT. And so they were going into these raises, and they talked to more than 100 VCs, and none of them moved forward. And they had to end up going to raise money from people like me on an individual basis for their first couple of rounds. Once they got over that and got the confidence not only in the business, but in themselves, when they went to raise their Series B, they led with it. It was Tweedledum and Tweedledee. One guy went to community college, the other guy got a perfect score on the SAT, and together they're the perfect match. When they went out to raise that Series B, they had one of the largest Series Bs in the history of Los Angeles and California. It's like up there with Airbnb. It's like absolutely crushing big number type of Series B, which is an early round type of series. So the key there is that if you're hiding something about yourself, the people that you're talking to, especially investors, they assume the worst because they're doing what most people are doing about everything. They think it's about them. They think you're trying to deceive them and to lie and to commit fraud and to do all these bad things that you're not doing, as opposed to saying, look, I had a rough childhood. I went to a community college. This, that, and the other thing, whatever all these things that people deal with that actually makes you an interesting person, you should likely be leading with, as opposed to trying to hide. Because if you try to hide it, people assume the worst and they probably want to uncover what you're hiding from them. But the moment you say, whatever it is, in this industry, you can't be too buttoned up. So I have a friend that's in a heavy metal band and he never talks about it. I said, dude, this is a cool thing about your personality. He went on a very popular podcast, mentioned it, and the leads just flood in. If you're a heavy metal person in this industry, you got to reach out and just say what's up, right? So every single person did, and plus a lot of people that weren't did as well, because it's an interesting story. So that's how you build credibility. Be yourself, deliver on your promises, and always put yourself in a position to deliver for your investors. And, it takes time. It takes time. And if you are just getting started and haven't developed your own credibility, leverage someone else's and don't try to be the smartest person in the room, but point to them and say, I just recently became a partner at this firm, but they have 10 years of experience, have taken 10 assets full cycle and have been through 2 recessions, whatever it is.
That was so powerful. I love how you know the guy who started Thrive. My wife told me about the Thrive market like a couple of months ago. She's like, we should start this. It's healthy stuff, because she has a chronic illness. She has Crohn's disease. So we have to make sure we're like watching what we eat, and everything has to be the low FODMAP, something I had never heard of before this. But she's like, Thrive, they've got it. I'm like, all right. So we've literally been ordering Thrive. It's just so funny that you invest in that. And then you mentioned some guy that's in a heavy metal band mentioned it, and all these leads came in. I'm wondering, were these leads like he was in real estate, like investing, and he just mentioned he was heavy metal. So then all the real estate investors that liked heavy metal were coming to him?
Well, there's part of it that definitely. So that's what you just asked is such a powerful concept, because it goes back to our conversation about your ideal and dream client. Because when you focus on your dream client, so I have a coaching client that has a background as a pilot, and he was like, I don't know if I should do my company called Turbine Capital and create a podcast specifically to airline pilots. But I was like, you definitely should. He's like, the market's not large enough. I'm like, okay, you're going to get way more people listening to your podcast than airline pilots, but you're going to be known as the airline pilot, because that's the whole point. You must be known. A lot of people are cautious about what they say. No, what's the problem is that no one's listening. No one cares. So like, you have to get over that hump first, right? So as human beings, we're kind of inclined to want to be liked by everyone, or kind of lukewarm. But as entrepreneurs, we need to stand out so that people are attracted to us. I don't care about pretty much anyone. I just care about my dream clients. In this industry, if you have 1,000 clients, you have a potential for a multi-billion-dollar real estate company. 1,000 is not many when you have access to billions on the internet.
Wow. That's so cool. Well, now I feel like I should let everyone know that I too like heavy metal. Not in a heavy metal band, but I've been a drummer since I was 10, and heavy metal has always been my absolute favorite music to play. The level of like complex, like how complex it is to actually play, and every single limb on your body has to be moving at a different speed, at a different time signature. Love it. All right. Jumping back into raising money here. What is kind of dying down now? I feel like we've got so much just from only like 30 minutes of being on the show. I could go back and listen to it like 30 times and probably still learn something new every time. So what is one thing that the listener can do today to begin building some of these key principles for their capital raising business, or for their syndication business or flipping business, or whatever they're needing to raise money for?
I'd say that number one, identify the people that you want to mimic and model their own success, as opposed to try to figure out on your own. This industry is not one for innovation. And I think a lot of us as entrepreneurs, we have this creative kind of impulse, and we want to create new systems and processes and strategies. And that's fine. But if your goal is not just to be creative, but to actually make money and to make your investors money, don't innovate at all. In fact, you should never. What you should be doing is trying to find who you want to spend all your time with, be similar to, idolize, mimic their own success for your own, and then simply make the moves that they've made. And now, once you start doing that, the higher level you go, you may be able to make an impact on the industry. You may be able to make your mark, right? So I identified a mentor very early on, model. I got to a point where they went left and I wanted to go right, but I didn't just go right. I looked who had gone right, and then found a new mentor, model. And so constantly doing that. And then eventually I got to a point where I was at a conference and they said, raise your hand if you raised $1 million. A lot of people raised their hand. Raise your hand if you've raised $5 million. A lot of people put their hand down. Raise your hand if you raised 10. Raise your hand if you had raised 20. And so then it's like me and like 3 other people. And I realized, I need to write this book. Right? I need to make my mark in the industry. This is a book that has not been written yet, and I'm in a unique position to write it. And it was never that I had innovated. It's just that I had modeled so much that I put myself in a good position to be the one that wrote the book. Right? So my creative energy was fulfilled. It wasn't done until it was absolutely mandated. Right? I felt like, holy crap, I got to write this book before someone else does.
Yeah. That sense of urgency. I love that. Okay. Before we transition to the next segment of the show, where is Asim Capital headed in the future? Do you have any big, hairy, audacious goals for 2021 or, the next couple of years?
Yeah. So as far as capital placement is concerned, it's always important to kind of balance your capacity with deal flow. So what I mean by that is in 2020, I said, I wanted to raise $25 million. We built up capacity to do that. And we did one deal, and it was not a real estate deal. And that was fine, because I've learned that it's far better to do no deal than a bad deal. And so it's hard to kind of balance that as someone who is goal oriented and growth oriented. But barring a second coronavirus, I think we'll likely raise close to $27 or $30 million in 2021. And that's an important metric because of what we do professionally, but also it implies that we're going to help a lot of investors achieve great returns. And so, we're quite not super far into this. I think we've raised $7 million as of the beginning of March. So we're right on track. It's the end of Q1 and we're going to be close to that 30 million and we're close to 10 million by the end of the quarter. So we're on track to do that. And as far as big picture, it's limitless, right? There's no comps. You don't have to look at your competitors to see what's possible because what's possible. Billions or tens of billions, right? There's no limit. So that's what's going to happen.
Right. It's just whatever you want to do, whatever you think is cool. Like it'd be cool to raise
That's exactly right.
$500 million or something crazy like that.
Yeah.
Awesome, Hunter.
We just had a speaker that at one of our programs, that had raised $250 million in 2020. So there you go. And he's a really smart person, but he is different than me, right? So it's really important to recognize you may listen to this podcast and there may be weird things about my personality or the way that I speak or whatever, where your inclination is to check out and be like, well, that worked for him, but I'm not him. So this isn't going to apply to me. But if you continue to pay attention and listen to shows like this, you'll recognize there's extremely successful people with a wide variety of different skills, what they bring to the table, what their inclinations are, this, that, and the other thing. And if you're listening to this, you have a place in this industry as well at a high level. So don't let it discourage you.
Your screen just went black, Hunter.
Yeah, no, I know. It's because my camera's heating up because I'm dropping fire over here. My point there is that if I was trying to be my friend Nick Green, I would be a not good version of him. I did not get a perfect score in the SAT. And so if you hear that and you go, well, that works for Nick. No, that's the whole point. His co-founder didn't graduate community college, right? So you have a place in this industry as well.
I love that. I mean, it just goes back to what you were saying earlier about being authentic. Everyone thinks that they've got to act like someone else because a lot of people say, follow one person like a mentor or something, do what they did. And all that's right. It goes back to the point that you were talking about. You don't have to be innovative, but at the same time, you need to not be yourself. Be who you are and be 1000% you. And that'll be your differentiating factor that attracts people to you more so than the competition.
Excellent summary. That's exactly right.
All right. Well, you still got a black screen, but we are going to go ahead and transition into the next segment of the show because you can still see me, right?
I can see you.
Okay. Next segment called the Pod Decks segment. I don't know if you ever heard of Pod Decks, but it's just a little company that makes decks of cards. Cool. And on the back of every card is a question. So this is going to be pick a card, any card. We're going to pick two, and then whatever it says, we're just going to ask it. So tell me when to stop.
Stop.
All
Stop.
All right. Sweating in your seat yet?
Let's go.
All right. First question. It's kind of an interesting question. Are we losing our right to privacy?
Jeez. Certainly. Yeah, 100%. So let me just make a quick comment about this. So my kind of libertarian worldview is definitely part of the podcast that I have and all that. And that's definitely one of those things that, by the way, libertarianism is very unpopular. If you're paying attention, I think Libertarian Party, not that that's an accurate reflection of people that hold libertarian beliefs, but it's like, 1%, 2%. It's literally the least popular political party like ever. But I don't care because I'm trying to attract libertarians and freedom-minded people. So I can make comments like that and I can never be canceled because it's no secret that I hold those types of beliefs. But as far as the privacy is concerned, I think a lot of people view technology. Now people are starting to recognize it, but for quite some time, people viewed technology as this way to freedom. Like the internet, it necessarily is pro-freedom, but like technology is a tool that can be used to crush you. Technology can be a tyranny as well. So it's just really important to recognize that this is not just a one-sided thing. And yes, I do think privacy is basically a myth. By the way, I am definitely a fan of the future, and I'm welcoming the technology overlords because I don't think of the tyranny in the same way that most people do. It's a little bit weird when you talk to your friends about, oh my goodness, I can't wait if we got to go on a trip to Utah, and you look at your phone, it's like thinking about going to Utah. And you're like, okay, that's kind of weird. But like, that doesn't bother me because I want to go to Utah. So maybe I want to click that, right? I'm much concerned about the kind of drone stuff. That's my like the censorship, the government stuff is what freaks me out, but not the advertisements that I actually want. So, all right.
Wow. I mean, there was a lot more in that than I thought we were honestly going to get, but I appreciate the deep dive into the reasoning behind that. Okay. Next question. What's the most common reason for people failing or giving up?
Dude, great question. And it's because they're not emotionally prepared for loss. And that's why I talk about what I talk about in my book. So if I told a very abbreviated version of that story. You can read more about it in my book, but like, imagine going in with all of the confidence in the world. I mean, I love to communicate, right? And communicating effectively and communicating enthusiastically is something I've been able to do since I was quite young. So I went in there thinking like, this is going to be a total pushover. If you put me in front of the right people, watch me. 30 minutes later, I'm going to raise $1 million. And so I was texting the person who is my wife, but at the time was just a girl that I was chasing around, saying, I can't wait to celebrate you, my first million under management. Like, how great is this going to be? My career is going to be off and it's going to be amazing. And I got kicked in the gut. I mean, I had to like lie about what was I going to say? Like, I couldn't literally be like, oh, like I'm not actually successful in any capacity. I had to like, in my own mind, I had to justify, no, maybe I'll get it. By the way, I did end up raising $500,000 for that deal, but it just took a lot more work than I originally anticipated. It was very embarrassing the way that it had to go. So what ends up happening is there's three elements here. One, either you've gone through this already, you've been kicked in the gut and you're kind of nodding along. You're like, oh, I remember that. The second is you've never gone through it and you have no clue what I'm talking about, but you're about to go through it. And maybe then you'll remember this interview. Oh no, he ended up going on to accomplish some cool stuff. Like I can too. Number three, this is especially important. You're going through it right now and you don't know it. You think you just ended your career. You think you just hit a hurdle that's actually the big one and it's just a one. And when you look back, in 10 years, it's not going to be anything. It's going to be meaningless. So what ends up happening is you get bigger and hurdles, things that happen that are like, oh my gosh, this is crippling. If you're doing it right, because the stakes you're doing it at are higher and higher and higher, that means that you're doing the right thing. So that's what most people fail, is that they let the emotional component get to them. Most of the time, it's not even the financial one. It's the emotional component. So don't quit. Keep it up.
Don't quit. All right. Now we're going into the last segment of the show called the Core Four, same four questions we ask every guest. First question: what is your favorite real estate related book?
I'm not going to say mine, so don't say that. Obviously, Rich Dad, Poor Dad. I'm sure a billion people have mentioned that. I'll mention a book that's not real estate related directly, but it's Cameron Herold's Double Double. It was the most influential book that I had for the structure and how I wrote mine. It's his operating manual for how to run a business. So if you read, it's a $25,000 coaching program in a book. So check it out.
Yeah, I love Cameron Herold. He's got so many.
Good.
And he doesn't just talk about one specific thing. Like So Good They Can't Ignore You. And then he just wrote a book about like emails, like the destruction of emails or something. I don't know. It was just on a podcast.
I think that's a different book. I think you're talking. So Cal Newport is So Good They Can't Ignore You. That may be a confusion.
Oh, we're talking about
Cameron Herold. Yeah. So he's like Vivid Vision and that stuff. Raise Our Kids to Be Entrepreneurs.
You're so right. I'm so glad you corrected me. Cameron Harold.
Both are
I
good.
love his books too. Vivid Vision. We actually just had a
Yeah.
conversation with my partners about creating our Vivid Vision because we
Cool.
need some clarity. Yeah, his books are awesome too. I'm gonna have to read that. Double. Okay, great. Next question. What do you think your unique skill is that helped you become successful?
Very simple. Communicating complicated ideas effectively in a way that attracts both new investors and experienced expert operators.
Now, see, now I feel like I need an example. Give me an extremely complicated scenario that you can define in like a page, a couple paragraphs.
Well, one that comes up all the time is like why people should be investing passively,
Okay.
right? So I can say very briefly, like you can defer to someone else's expertise and demand their time, energy, access to capital, software, et cetera. And you can just simply fund the deal and continue about your business. Plus, you don't get the liability associated with owning real estate. That would be like a very short version of how I'd explain that. But I could also go into like a more holistic and more robust perspective, which is like portfolio allocation and the economies of, focusing on one particular niche, and the fact that you, as someone that understands economics, I need to be very good at one particular thing to have a market advantage over my competitors. But being good at one particular thing in the world of investments can lend itself to over allocation. So as someone who's cautious about both of those things, I'm really good at one thing, which is identifying quality operators so that I can then defer to their expertise, be invested across a multiple different myriad of sectors, risk profiles, et cetera, that I mentioned previously, and have a very asymmetric portfolio, but trying not to be a jack of all trades, right? So, and I can go on and on about that, but most people will be interested in both sides of that depending on where they are in their learning curve.
Nice. You just crushed that. You just killed it.
Okay.
I got it. All right. Next question. Tell me something that's true about real estate that almost nobody agrees with you on.
Well, it depends on who I'm talking to, but I would say that people that are listening to this will not agree with this, but you need to be pricing in the lack of liquidity into your investments. So like, I don't think people do a good enough job of that. Like if I could get a 12% IRR that's very predictable in a stock and a 12% IRR that's equally predictable in a real estate deal, then obviously I'm going to do the stock deal because the lack of liquidity in the real estate deal is extremely consequential. Now, it just so happens it's very difficult to get a predictable 12 IRR in a stock, but in real estate, it can be highly predictable. But just something to think about.
Very interesting. I've thought of that, but not in detail. Now I feel like I need to. You just got me rethinking everything, man. This has been
the question is, how much of a premium should that apply? Like if the stock market can produce 8% returns, perhaps getting a 12% return in real estate is fair. But for some people, it doesn't matter at all. They don't care about liquidity. So it's different for everybody. But that's why no one talks about it, because it's a nuanced topic.
Okay. Which just goes right back to what we were talking about earlier about finding your avatar. What are they more interested in? Love it. All right. Last question. What one piece of advice would you kind of already gave it, but what one piece of advice would you give to our listeners wanting to succeed in real estate investing?
Yeah, model what works. I've had people that I've interviewed that have done hotels, self-storage, mobile home parks, office, everything in between, and they're all making tens of millions of dollars. What really matters is identifying the people that you want to spend the rest of your life with and do the steps that have put them in that position.
Nice. Cool. All right, Hunter. If anybody wants to learn more about you and your business, how can people get in touch with you?
So if you're interested in investing passively, we have a really cool ATM deal right now, which is the most oh my gosh, the deeper you go in due diligence, I know it sounds crazy, ATMs and Venmo and PayPal exist of all this stuff, but the deeper you go in due diligence, the more compelling you'll find it. And you can learn more about that at asymcapital.com. And if you're interested in, purchasing my book, which is a great place to get started, raisingcapitalforrealestate.com.
Love it. Well, hey, man, I really appreciate you taking your very valuable time to come out here with us for about an hour and share with us the most exquisite knowledge bombs that I've had to date, So I appreciate you coming out on the show.
Happy to do it, man. Thanks again.
What a great episode. Hunter is a man of many talents, that is for sure. One of them definitely being communication and his overall drive to follow what other people are doing, not in a creepy way or in a way that is not different or unique in any facet, but he sees what other people are doing to become successful, and he just goes full force, throttle wide open at that particular strategy, whatever it is, whatever strategy he felt drove him and that he thought would be cool, that would be exciting, and that he really wanted to spend the rest of his life doing. And so he goes into that being 100% himself. And that is the differentiating factor between people wanting to invest with him versus wanting to invest with other people. Because if there's one thing that I have learned in this business, it is that 100% of the time, people are investing in you far before they're ever investing in the actual deal. The deal just is a byproduct of their relationship with you as an individual, as a business person, as an investor. And it's all about relationships. It's all about connections and being yourself, being authentic, so that you can create an authentic relationship with an individual. Because if you're hiding something, like if you guys remember the story Hunter told about his friend that actually started the business, Thrive Market, you notice that he was trying to hide the fact that he didn't graduate community college. But in fact, it made him way more interesting because he had already been successful and hadn't graduated community college, rather than trying to hide it. And I think Hunter did a great job at really explaining that. So I'm so stoked about this episode. I know this is the end of it, but I'm stoked that we were able to get him on and that you guys were able to hear all of the great information that he was able to give. So before we sign off real quick, just wanted to mention again, if you guys could leave a 5-star rating and review, it would be fantastic. It helps so much, not only us, not only looking out for our own interests, but also the interests of everyone else that is looking for a podcast like this, looking for different creative strategies to create wealth inside of real estate. So if you know anyone interested in real estate investing in any facet, then definitely let them know about the show. Or if you don't know anyone, leave a 5-star rating and review, and it helps continue to grow the show. So with that, this is Josh Ferrari signing off.